Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bid a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday morning edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. Got a busy show today, a lot to discuss. Is the market turning? I guess that'll be the topic of the day. We have some very strong opinions on the matter. I'm sure will dominate the theme of the show. Our guest today, 8:35, we're joined by Rob Friesen, president of Bright Trading. Joel, what's doing in the markets this morning?
S&Ps are down 275, 25 and a half. Your pre-market high, nothing up there at 31.50. We will be looking for that for continued upside. Not a lot in the $30 handle until you get to Monday's close of 38.25. You have crude in the red here by 76 cents. Thought we were going to 60. Maybe we're going to 50. Gold in the green by $4.50 at $12.69.40. Silver clinging to the $16 level, up 4 cents at 16.11, and trading over the $13,000 level at $1338.90, up 10%. Bitcoin. Dennis, how you doing?
That just goes up every day. It's like the opposite of G. G goes down every day. Bitcoin goes up every day. It just does its own thing. But holy cow, when you think about this market here, we got volatility back in the market itself. And, let's talk about that because it's been a while since we've seen, these sustained sell-offs here. BTFD has been winning for a long time, especially on the tech stocks. But I tell you, in the last week and a half, if you've been buying the dips in these techs, it has not been working. You've had little rallies in there, but really when you look overall, we had the sell-off, and then we had a little bit of a pause and another sell-off, and a little bit of a pause and another sell-off yesterday. Despite, being strong for the majority of yesterday's trade, we sold off hard at the end of the day, and a lot of those techs ended up closing up red. Down here again this morning, just slightly red here, but it's concerning because if I feel like it's changed. We went from this buy the dip mentality, and in the last week, it seems like sell the rip is winning. What are your thoughts here, Joel?
Well, a couple things. One is, I love to keep track of the 9-day average trading range. And for a lot during this bull market, we got down to like 9 points and 10 points and 11-point ranges, just grinding higher in a low volatility environment, which is great for the market, right? Low vol. But now that 9-day average range is starting to get back over 20. It's actually 22.50. I use that for targets on the day. So you have, you had a couple big upside days. One day you thought was the upside capitulation, and then on Monday they did it to you again. So the volatility is creeping back into the market. A lot of stocks that, have had rallies in the techs, they've taken some profits. They haven't gotten a bounce yet. And then you made a great mention that, some of these dogs that were bought up are starting to show some weakness too. So it looks like the money's coming out of the market, but it's not. Maybe it's just going into cash for the rest of the year. I mean, if you're a portfolio manager, you're sitting on 15, 20, 22% gains with absolutely nothing done in Washington. Man, oh man, you're setting
lock it up.
Yep, lock it up, baby. And that's what I'm going to do when I meet with my boy here in next week or so. Why not ring the register on some things, see what happens at the end of the year, reevaluate for January. But to have the expectations to do the same thing 2018, then you're really asking for a lot.
Rotation has kept the SPY and the S&P futures at the highs. It's been rotation that has been saving it. When tech was getting wrecked for the last week and a half, we've been rotating into Macy's and Kohl's, and the financials all caught a bid. Yesterday felt like a turning point, though. Yesterday felt like it wasn't rotating. It was actually coming out. Quiet here this morning. I feel like it's the calm before the storm because I feel like there's going to be more selling pressure that comes in here today. Techs are slightly, just kind of slightly down here. But it is concerning to me that the leaders who were the financials in the last week and a half ended up closing. A lot of them closed red yesterday after having pretty good opens and being pretty strong throughout the day. So rotation has been holding up this market. I just wonder if the rotation is now coming out of the market, like you were saying, Joel, and that is concerning. And, so what do? How do you protect yourself? Well, I'll tell you, I've been nibbling here, and this is something that I never put in my portfolio long term. It's something that I don't even really like trading that much, but I've actually bought some TVIX. And it's just because it's cheap here right now. And if you think the volatility might actually climb, the TVIX will explode. We saw it 3 days ago when TVIX got all the way up to $9.26. Volatility started to come back in. TVIX comes right back down. But you get these explosions. If you think the VIX can go to 13 or 14 overnight, which I think it can right now, I think it has the potential to do that. TVIX is a cheap way to play it. Now, don't get married to this position. This is going to be like a day or two trade for me, probably only. But I'm feeling like there could be a little bit of, maybe a little bit of capitulation, short-term capitulation selling from the techs, and maybe, some continued selling in some of the other stocks. And that's why I've been nibbling on TVIX here. It's cheap at 774. Again, don't get married to the position because we know long-term this continues to go down, but it has these nice little volatile spikes every once in a while. And if you can time them right, you can actually make 20, 30% on your money in a hurry. So that's how I'm protecting myself just over the next few days to see how this dust is going to settle. Market starts to turn around, catch a bid, I'll take my TVIX off, maybe lose, 20, 30 cents. I think if the market continues to sell off, I think TVIX could go back up to that 9.5. So I kind of see like 20, 30% upside and like 5, 10% downside in the TVIX. And I like the 3-to-1 risk reward ratio. So that's why I've been nibbling the TVIX.
926. I was not here on Thursday when you had that big. Actually, that was on Friday when we spiked up when the news out of Washington. It spiked to 926. I have observed this thing trading. Jeff likes to trade this instrument too, and boy, you got to have your orders out there because it hits these extreme levels, and then if the volatility wouldn't continue, then it goes right back down. So 926 was your spike high. There's just one more question before we move on to some individual issues here. And I'm just giving a hypothetical situation here, and you don't, just treat it the question the way you want. Let's say you had $100,000 portfolio total. Okay. Of all your money in the market. I mean, are you putting, 5% towards this, 2%, 1%, just based 10%, just based on that model? I know it's a tough question.
And that's a difficult question. You mean buying the TVIX?
Yeah.
It all depends on how much you want to hedge by. Like I've already probably have too much cash in my portfolio. So this is more of a trade for me, not really a portfolio hedge.
Okay.
But a little bit, because if it goes down, obviously my portfolio is going to get hit. But I've been running way too high of cash for a long time. I would love a pullback just to get some of that more cash to work. I'm like those other portfolio managers. I've had too much cash in my portfolio there. I always run a little bit too much cash though. Maybe it's because, I don't feel like I'm as young of a trooper as I was anymore. I know, we actually had some plans to do, some renovations on maybe one of our house or our cottage there. So and any money you're always going to use in the next 2 to 3 years, you kind of need to keep that separate. So I do have a big chunk set aside for that. But that even being said, my cash is a little bit too high right now. I'm probably 10 to 15% too high in cash. So I would love a pullback to push some of that cash to work. Again, the kind of stocks I buy, like buying value stocks, though. But some of these techs, there's some value stuff, in some of the techs too. And if some of those were to come back in, I'd love a chance to put some of that to work as well. So, I'm kind of hoping, for a pullback for my own personal gain here. But at the same time, I'm reading the signs. I'm reading, what the tea leaves are telling me. Then that's my job as a trader. I've been trading 18 years. It's my job to kind of read what the signs are kind of showing me. And it just felt different yesterday. It felt like it was a little bit of fear out there in the market, which we have not seen in a long time. It wasn't a big sell-off, but it was enough at the end of the day that I took note of it. And I was like, you know what? Why not buy a little bit of TVIX? If the fear starts to come up here, if the VIX starts to come up, you can make some money on that. If it doesn't, cut your loss on that and move on. Small loser, whatever. I don't want to get married to. I don't want to hold it for a month and the thing's down to $4. So you can't ever get married to those positions when you're trading those kind of things. But it's all just about market timing, and that's how I get paid, is to time the markets. And I feel like there's more downside here as opposed. I feel like the path leads just for once is actually down as opposed to up.
I've been in too much cash since 9/11.
Hard. Well, you know what? Yeah, well, that's just it. We got burned in the financial crisis. I had my portfolio. I had some cash back then too, but I got hit pretty hard back in 2007, 2008. And I said, never again. I will play the market. I will have some investments, but I'm never going to get, 80, 90% invested into the market because stuff can happen. Stuff goes south. I'm like, I'm at a comfortable situation in my life now where, I know I'm comfortable enough that if, it's for whatever reason I couldn't trade or it couldn't work anymore, I'd be okay. So that's why, I have a lot of preferred stocks. I have a lot of stuff, that's a little more defensive, and that's, my portfolio is littered with dividend paying stuff. In this type of market in the last 4 or 5 years, I've underperformed. Guaranteed I've underperformed. But just because, and this is not my trading portfolio, this is my invest portfolio, but I'm more conservative. I've got a conservative portfolio that's more geared to yield as opposed to geared to growth. And, maybe it's because I'm getting older. When I'm 20 years old, different story. But, as you get into the mid 40s and stuff, you start thinking, I don't know if I want to trade for 50 years or 30 years or 20 more years. You got to start thinking about stuff like that.
You got some big expenses.
I get 5, 6, 7% of preferred stock. I'm pretty happy, even though the market's up 20%, but it doesn't go up 20% every year.
You got some big expenses coming down the pipeline too, buddy. For college.
All the kids, you got to be prepared for those too. So,
all right, so let's go to some individual issues here. We have some movers this morning. Fewer earnings plays.
I want to stay away from the earnings. What I want to go to, just continue my theme, Home Depot.
Okay.
So big news here out of Home Depot this morning. Spencer, give us the details, and Joel and I will break it down.
Well, they had earnings today. So,
I'm
sorry, not earnings.
No.
Spencer,
dropping the ball here, buddy.
They announced
Spencer's last show today.
Yeah, they announced a $15 billion buyback and reaffirmed their guidance for the fiscal year. So,
good news. That's good news.
Good news.
If they would have did that last week, the stock would be up 5 points. But no. Market sentiment has turned here now. So $15 billion buyback, you only reaffirmed, you didn't raise your guidance, not good enough. And that's what this market is right now. It's all about finding reasons to sell. The reason here to sell, they'll ignore the $15 billion. Just like before 2 weeks ago, they would have ignored, that they didn't raise guidance. They would have just focused on the $15 billion buyback. Now the market wants to focus on the negative. That's why I'm telling you, I feel like it's turned. Stocks like this give more evidence that the tide has turned a little bit here, at least in the short term. Long term, we don't know. Nobody can predict out more than, I think it's hard to predict out more than a week, to be honest with you. But right now, I feel like portfolio managers are focusing more on the negatives. Didn't raise guidance, so we're going to hit the stock. Forget about the $15 billion. Don't care about that. We're hitting the stock. Home Depot down 4 points on a $15 billion buyback. More evidence that this tide has turned.
No daily support until 176.70. That is your 3-day low. We're only $2 away from that. So keep an eye on that. Also, Tess, and I don't know if you were playing it yesterday because it had a lot of news on it, but Bank of America, they really got crazy in the pre-market. They took it up to levels they never saw in the regular session. Well, I'm just talking, I think it got to 29.44 in the pre-market trading. Yeah. The only reason I mention it to you is because open 29.27, previous day's high 29.31, the high from yesterday 29.30. Right there, double top, closed under $29 at $28.93. Did you not play that because of the buyback? Because there's one that opened 3 cents from the high of the day.
I did try to play some of the financials. I can't, my goldfish memory here, I don't even remember what I was trading yesterday on the open. Usually I am trading the financials. I remember having a pair trade on in one of them. We're going to get Rob Friesen on here in about 17 minutes from Bright Trading, who's actually our president of the company that I trade with. And he'll tell you about pairs trading. And, this is, the way I approach all the market is usually I'm hedging, except when I got a call. I'm feeling a little bit more bearish right now. So I'm sticking a little bit, my neck out a little bit on the short side there. But, normally I'm hedging. And when I'm trading the banks, I'm usually trading one bank against another bank. And, maybe one bank opens up a little too high. Maybe one opens a little too low. Maybe one closed a little bit too weak and one closed a little bit too strong. For whatever reason, I feel like that relationship between, the value of those two banks is out. And I put one on and, a short one and buy the other one, usually in equivalent dollars. Sometimes considering betas, like a Wells Fargo, you have to do a little bit more compared to a Bank of America because Bank of America is a higher beta. But I can't remember what I was trading yesterday on Bank of America. But I do remember, was that a buyback yesterday?
Yes,
that
it was.
Driving that up too? And they faded it.
Yes.
MasterCard had a buyback, really didn't get any legs from that either. Actually was trading down yesterday before finally closing up. So buybacks aren't doing it right now. Buybacks are not doing it for this market right now. And that's a major consideration here again. Again, the evidence is starting to build that the tide has turned from buy the dip a little bit to sell the rip, at least in the short term.
I mean, announcing a buyback, I mean, you want to use buybacks like on weakness when there's maybe they anticipate, maybe they want to be authorized, to be able to buy back the stock. But holy mackerel, maybe they figure there's plenty of sellers up here so they can find buyers. But man, you like to see buybacks, when after a sustained down move, the company feels confident that their stock is cheap. I mean, what's the PE on Home Depot here?
It's higher than you think. Let's go grab it. Spencer, what's a race here? Get in that pro and see what the PE is. I'll try to grab it too. Spencer's racing me right now. I got 20. I got 25. I think I beat you to the race. So 25,
yeah,
is that what you got?
Me, that is what, yes, that's what I got. PE, wait, for HD we're talking about?
Yeah.
Yeah.
I got forward PE of 21. Let me check another.
Yeah, forward. So I'm looking at current PE.
Okay.
So current PE, forward PE 21, current PE 25. Talking to retailer that isn't growing that much. 21, 22, 25 times. I like paying 12, 13 times. I know there's not a lot of stocks you can do that in, but there is the odd, sector that is obviously still trading low multiple. I don't know. It's kind of expensive on a PE multiple. Do you have a history of, I don't know if the Pro tracks that. The history
they do
of
that?
the PEs?
No, I bet you they don't.
We should do that. Maybe we should start doing that.
Do you know if that's...
I'd be curious of the history of the PE of Home Depot because I think it's traded in the teens a lot of times. 25 is on a current PE. Seems high to me. Doesn't it, Joel?
Yeah. What's the PE of the S&P right now? Do you know?
20?
Yeah.
Anybody in the chat know? I'm just going off the top of my head. 20 maybe?
The only reason I asked is because this tax bill, quote unquote, I mean, is supposed to just have an incredible, positive effect on, on earnings, quote unquote, for these major companies. So, I mean, that's probably why you had this buying spree. I think the thing, Dennis, if you see something about the tax bill, if you're holding that VIX, I mean, that's what moved it on Thursday that's what, has moved us up. Any kind of delay or stalling or no vote in that, man, that's the time that VIX is really going to heat up.
Jump over here just to other stocks in the news here. We did have a few earnings stocks here from last night too. We had Play and we had Restoration Hardware. RH is a stock that is just, it's been strong, so strong. And the report was okay, got hit a little bit on it there. Just kind of hanging out in the pre-market. Spencer, details on Restoration Hardware.
Oh, I thought you were going to Play first. Okay, RH it is. Q3 EPS $1.04, which was the estimate, and sales of $592 million versus $591 million. So a slight beat on the sales number for Q3. Q4 guidance coming in, sales guidance that is coming in line with the estimate. Fiscal year 18 guidance was reaffirmed.
It's all okay. It's not great. It's okay. I don't know. I'd honestly think this would get hit on this. It got hit a little bit last night. It's offered down a little bit in the pre-market. I'm not coming in and buying it here, though. I mean, the stock's been an absolute monster performer. They've been hitting these kind of stocks as of late. I'm actually surprised it's not down.
You know how you have some stocks that you just don't put on your screen?
I think this is one of them for us.
Yep. I think
me and you have never liked this stock, and it's been straight up.
Now,
Jason Raznick has been all over this one. He's been all over Tesla as well. So like we said, we got to get the Raz around this show a little bit more because he makes some pretty good calls. And RH, he's been in. Is he still in it? Do we know? Yell at him. Is he still in that Restoration Hardware?
I don't know if he's still in it. He could be. I haven't asked him.
I don't know. Can we have?
I think Joel's about to yell across the office.
He's yelling.
He's yelling
Raz,
across the
still
office.
Got your RH. We need you on right now to talk because he should be the one giving the analysis on this.
I'm pretty. He hasn't said otherwise. So I'm going to.
Joel took off to go ask.
Yeah, Joel's yelling across the office right now.
That's like $35 or $40. Guy's a genius on this one.
I don't understand it. It's very. I've never been there before.
I don't understand either. It's like it's all antique looking stuff, and they charge. I guess they sell one thing, they pay the rent for a week.
Someone said
everything looks like it should be $500. A couch should be $500, and it's $5,000. I guess maybe huge profit margins there.
I think someone said Restoration Hardware is where you go when you want to look like, because a lot of their stuff is like urban chic, as it was like described to me. So it's like if you wanted to look like cheap, but it's actually super expensive.
I know. That's what Joel was saying too.
Is
Tesla stuff all looks like it's old.
Right. If you want to look like you're poor, but in reality you just dropped a lot of money. All right, wait, Raz is coming on. Wait, Raz is on right now. Raz, are you still in RH?
I'm Raz, Jason Raz.
Jason Raznick
on Twitter if you want to follow me.
Okay. Are you in RH?
A little bit. Not
as much. Lightened up. I lightened up.
So here's the deal. My wife and friends still love it. They like paying the membership fee and getting discounts when you're remodeled. So if you look at Lowe's and Home Depot, here's the thing, guys. And then Jim Cramer said about this yesterday too, but when you're in Lowe's and Home Depot, you don't know what store you're really in these days. Brand is disappearing. Restoration Hardware has brand. People like going there and getting shopping ideas and buying there from when they're remodeling their house. And you got Lowe's and Home Depot who are doing, amazing. Remodeling and the housing market. Obviously, Toll Brothers took a hit yesterday, but Restoration Hardware, did have a huge jump. If you look at, Joel's charts, you see the huge jump it had. Stocks aren't a straight line. I mean, they just aren't a straight line up. If you look at, from Amazon, that stock, you can tell everyone, over the last year, 2 years it is, but these companies that continue to excel will have big spots where they drop. Look what's going on with Tesla. So, I'm still a believer in the brand and the story, but sometimes the price gets ahead of itself and they retrace. It's either another chance to get in and buy. I still believe in the story. I know retail is tough, but Restoration Hardware is not just retail. It's an experience. And it's
an experience. Oh, I like that word. What about Tesla? You still in your Tesla?
Yes. Still in Tesla.
Are you a buyer of this pullback, Jason Raznick? We went from 380, we're down to $300. So we're basically 23 or 24% off of the highs here, at least 20% off the highs. What are your thoughts here on the Tesla pullback to the 300 area? Is this an opportunity, one of those opportunities, or is the story just need a pause for a bit?
So I'm looking to buy more, and I'm looking to buy long-term calls on this one. I own the stock outright, and my portfolio is down for it from the 357 range, 360 range. I don't think the semis, the introduction of the Tesla semis, TSLA, just for the symbol, if people are looking it up. But I don't think people realize how game-changing those are. A lot of the negative backlash on those semis were that they're not going to go long haul. They're not going to go 1,000 miles. Well, things have changed in the shipping industry. Most of the stuff is short haul these days. There's a lot more distribution centers. You talk about Amazon putting more. And so, and I know this because Tesla worked for 2 years, 3 years with a local trucking company. And there are a lot of these short haul things. DHL to Meyer to Walmart have ordered some Tesla semis. This is something that I don't think is accounted for in the market. I think Tesla, it sounds crazy. And remember, the crazy ones are the ones who are made fun of, right? And right now, you would think Tesla is like, doing some trucks. No, this thing is aimed at taking a lot of market share. And I think it will. Obviously, what's holding Tesla stock back is its manufacturing problems. The Model 3 has had many problems, and people like you, Dennis, have said it probably. Whether you said that it would, not hit the manufacturing goals, just because of the past history. So you called it right. I mean, that part is right. The long-term thesis, though, I'm still there, bullish. I'm a little disappointed with Model S. I'll be honest. They haven't made any really upgrades any significant or lowered the price. I mean, the Tesla gets, for $100,000 Model S, you don't have a coat hanger in your back seat. It's like how you hang your suit or something. Those are like little things that should have been taken care of, and they haven't. So that part of the story I'm not excited with. I know they're not lowering the price because they need to pay for the Model 3. And the other overhang of the stock is, are they going to have to do another financing to pay for all the Model 3 stuff? But if the bullish case would be in 18 months, when you look outside your window, you're going to see Model 3s down the road. I was just with someone at an airport who had a Model 3, and I'm not kidding you. Every single person around that airport stopped, wanted to see inside it. Tell me which car on the road gets that experience other than a Lamborghini, Ferrari, maybe a Porsche. There isn't any. And this is a $40,000, $45,000 car. I mean, if they can execute, again, it's execution, just like in any business. If they can execute, you're going to say, I wish I bought it at 290 to 300. That's what you're going to say. And I'm at that stage right now where I may back up the truck and buy more shares. Give me a gong ring, Spencer Israel.
Last one, and we'll let you go. Why don't you like Ford or GM compared to Tesla?
It's too hard to innovate in one of those big. Not you said why don't I like? I didn't say I don't like Spencer Israel.
Okay,
but
stand corrected.
Okay, but it's competing. So what I learned from Tesla is they're starting anew. So it's like if you're making all this money on drivetrain with an engine, and you're making all this money per vehicle, it's hard to go switch to being this electric business because all your margin is on this drivetrain with the motor. It's really hard to change it, and you've seen they haven't. And everyone here in this office, we love a Tesla just because, because how cool it is and how game changing the system is. It's software on wheels. That's what it is. But Ford, for example, nice dividend, and GM. These companies can compete as well, and they're trying to. It's just Tesla. If you want, want to be, on the innovative side of things, that's what Tesla is, and that's what we're looking for. And that's why Tesla stock keeps getting hit, because when it's not growing or it's not innovating, it's dead. Now the semi, again, what happens is people talk about things, then the experts get it, and then eventually it becomes mainstream. That's what happened with the Model S. I bought Tesla at $38.10, and there was a few Model S's on the road. And then they started being everywhere, and then it became mainstream. I think you'll see that with the semis. I think that you'll see that with Model 3. I personally hope Tesla goes down to around 280. That's when I'm going to buy more. And if we really want to do a valuation, on Benzinga, we have like a report. You can email me at jason@benzinga.com and show you why this company should be worth about $600 a share. I know that sounds crazy, but if you model it and it achieves the targets of like 5% market share and stuff, it hits those numbers. So that's for me this morning. Jason Raznick signing off. Thanks for having me on, Joel.
Thanks a lot.
And Dennis and Spencer Israel. The show has been great, fantastic. I actually listen to it on YouTube every morning. I know you guys are on other channels too, but that's where I listen to it. So
appreciate it.
Really enjoying it.
Thanks for coming on.
Thank you for having me.
If there's one thing I've learned working here, and if you want to get Raz talking, just ask him about Tesla. He'll go on about that for as long as you want.
Spencer Israel. Some would say, just ask me about anything.
Okay, ask him anything. Ask him anything, and yes, and he'll go about it. Anyway, thanks a lot, Jason. Joel is back with us now. Dennis, you want to do some quick imbalances?
Let's go take a look here. Okay. Thanks, Jason, for the Tesla talk. Maybe I'm going to add this to my portfolio too.
Oh no, Dennis is buying TVIX and Tesla on the same day.
It's not a value stock.
Let me get off my chair. I'm back on my chair. I fell on.
You know how I hate growth.
I fell on the floor, and now I'm. First, when I saw your text that you were, or your Skype that you were buying TVIX, I fell off my chair, and Spencer had to help me back up.
That's the thing I say. I never bought TVIX. I got some of that in my trading portportfolio.
And now you say you're buying
look
Tesla,
at it, doesn't even look right in there.
And I got nice pants on too, and I fell on the floor twice. Oy. All right.
All right, imbalances here. They are small. Nobody making a call here this morning. Everything looks very small. Snap's got 29,000 to sell. We actually had a ratings change or a price target initiation there from Evercore. They gave this a underweight and a $7 price target. That's why Snap's trading down. Full disclosure, I'm short some Snap. Jumping over here, Coca-Cola 68,000 to sell. Verizon 40,000 to sell. Man, I'm trying to find anything that's of significance. These are so small. It's disappointing. XOM 28,000 to sell. Chevron 20,000 to sell. Citigroup 46,000 to sell. It is quiet out there, guys, in imbalance land today.
All right, I'm looking here. I have on my main monitor here, I have 85 stocks and commodities and stuff and different things that I like to look at. I see on the left-hand side, besides gold and silver, I have two stocks in the green. One that's GE up a penny, and the other is UNH up 66 cents. And that's covering the big stocks in the S&P as well, like really the top 25, 30 components in the S&P. And then on the other side, just a variety of stocks, retail, GM, and Ford. Square is up 53 cents. Is there a buying balance in Square?
Square is actually strong here. It's been strong all morning, and Square is its own thing right now. Like, it's still obviously moving with the text and gets wrecked when the other text too, but it's just so volatile. I mean, it's got a 10% range every single day. So it's got 20,000 to buy. Small buying balance has been up with the majority of the pre-market here. Did not make a new low yesterday on the move, which is good news. 35, like me and Joel pointed out that level out a couple times. Those two lows right below $35. Thought it might test in the last couple of days. It did not. That's good news for it too. It's starting to show some life. Square is starting to actually show a little bit of life here.
This one, it had that big sell-off initially off that 49.56 double top. And remember, we got into the lower 41, 42 area. And I was looking for the 50% on that day. I was hoping for like 44.30, 44.40. And it got to 44 that day. And I was just a little bit too picky trying to pick up a short because this one tagged me earlier in the year on the short side. And I was trying a little revenge trade, and it didn't work out. Let's see here. I got a level for you here in Square. You are trading at 38.20. You got a pair of highs at 38.59 and 69 from the last two sessions. So if, in fact, you can clear that, you got about another buck up to 39.55. So keep an eye on that double top and Square here. Are we bringing in Rob on the fly? What do you want to do?
Let's take a break.
Quick break. Okay.
All right, quick break. We'll be right back with Rob Friesen, president of Bright Trading. Welcome back, everyone, to Benzingo's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. And we're on the line with Rob Friesen, president of Bright Trading. Rob, how's it going today?
Good morning. Great. Thanks for having me on the show. Appreciate it.
Thanks for coming on. You're out in California, correct? So it's early for you.
Well, I'm California time zone, but I'm broadcasting here from Vancouver. So
okay, Vancouver. There we go. Well, anyway, thanks for joining us. I know it's early on the West Coast, so appreciate it. And I think
no worries.
I think Dennis had a couple of urgent questions he wanted to ask you about.
I don't know if they're urgent, but
okay.
a couple. Rob, how you doing here this morning?
Good. What's your question? Is Bitcoin going to go up or down?
That's the question. We got to know, is Rob Friesen participating in the Bitcoin rally?
No, Rob Friesen is not directly, but you know, I'd be surprised. Everybody's thinking, well, you know, first of all, Wall Street always has a way of coming up with new products. So you've got, you know, a whole suite of products coming. First one, of course, the CBOE got the jump on the CME here as far as the futures go. But I wouldn't be surprised if Bitcoin actually goes up when the futures, because it's just more legitimized, right? So everybody's thinking, oh, everybody's gonna short and it's gonna go down. Well, who knows, right? Probably go up.
Well, they're short on the first day, and then they realize, oops, wrong, and then they'll all be scrambling to cover. We know what drives rallies is actually short squeezes. So because it's short squeeze there in Bitcoin, holy cow, will be at 20,000 overnight, Rob.
Right, but the real question is anyone trading stocks anymore with all this?
I don't know. Hey, there's a legitimate question there. You know, I think we still have a few people at Bright Trading trading some stocks there. So, what are the guys at Bright Trading? What are they trading here nowadays? Like, are we still doing a lot of pairs trading?
Well, actually, long, short, and pairs are still a main staple for our guys over all these years. So of all the people that have been consistently profitable, you know, day after day, week after week, month after month, it does revolve around the boring procedure of just grinding out money from being long and short at the same time. I mean, whether they do overnight returns or intraday strategies, it still revolves around watching spread prices and exploiting either the relative strength between two products or a group of products, or the mean reversion that comes once in a while. Now, low volatility, we certainly have a lot less back and forth action and mean reversion, but that doesn't negate, you know, the the opportunity that's presented both ways. And I think, people have lost sight of the value of maybe hedging in the light that the market's gone straight up for so many years and volatility is so low. And you go, well, why do I need to hedge? And, you're probably right. Why do you need to hedge? One day, I think that will become more clear why you should hedge. But for the interim, it's hard to relate to why you need to hedge, and it certainly ties up more capital. So I just think that it's easier to control emotions and easier mentally if you cross that bridge into relationship-based trading, when you cross that bridge into actually watching a spread between things. I'll give you an example. I mean, we've got lots of people probably in the Forex market. What are they used to? They're used to, Forex trading US dollar versus something else. So that same concept of watching one number between two products is so beneficial in the equities, and very few people have crossed that bridge. But those that have done excellent for years and years and years of consistent trading.
I mean, there's so many different strategies to take from pairs trading. And, we talk about some of them on the show. Like, obviously, I'm, right in that same ballpark. I trade hedged almost all the time. I was saying this morning now I'm a little bit on the short side because I've got a little bias that I feel like, and I'm a little bit of a field trader too. But at the same time, when you're talking hedge trading, this is something that I employed my strategies over 17 years as well. But there's so many other strategies you can derive from it. Like, let's take like sympathy trading, for instance, where a stock is maybe like Home Depot here this morning, for example, is trading down $4. Well, right away, you're probably going to see Lowe's trading down as well. So here's Lowe's without any news on it, actually trading down almost as much as Home Depot, almost chasing the news there. How do your traders, just take us through like a Home Depot Lowe's pair trade? How, what are they looking for, and how do they put something like that on?
I mean, first of all, there's on a regular basis, there's supply and demand inefficiencies. They're not going to track perfectly together because there's no contractual relationship between them. It's not like trading a Comcast A and a Comcast K, where it's two classes of stock in the same company. That's going to be completely different than Home Depot and Lowe's. So we have correlation or co-integration between them. We have fundamental and other influences between them. But generally speaking, there's going to be these anomalies. So some of them show up best, when one stock's open, the other one's not quite open, or they both open at the same time and the spread price is sort of mispriced for a period of time. There's also going to be that consistent sort of movement that happens intraday where maybe they separate. One is weaker than the other for the day, the other, so there's going to be some relative strength to exploit there. Don't think of pair trading always like, well, I got to go out and buy the weak one and sell the strong one. You don't have to play that game. You have to have a reason to go long one of the stocks and a reason to go short the other stock, and know kind of what is normal distribution for them and what tends to be an outlier. There's actually an incredible relationship in that Home Depot Lowe's from a fundamental perspective, and that is when you look at Lowe's Innovation Labs and what's happening on the exponential side of things with Lowe's, it's a completely different story than what's happening with Home Depot. The market has been giving Home Depot full value. It has not really been giving Lowe's the respect that it deserves in the innovation side. And I think one day that's going to kick in. Maybe it's starting, with Home Depot getting killed. So I think there's opportunity to have a position where you trade around your core position, like you trade some, hold some. There's also some intraday, there's some longer term swing trade. But there's a great relationship there to exploit. And you know what? Who else is in the home improvement space to that degree, right? That you can, that's publicly traded and that big a market cap. Those two are great to exploit against each other all the time. And when you do your job of keeping these two stocks in line, you're providing a service to the market, and you probably deserve to get paid. And that's from the market. That's what we look at,
Let's talk about a pairs trade that has kind of, maybe blown out, you could say, to a certain extent, and hopefully, the traders are on the right side of it. But Walmart Target is something a lot of traders trade as well. And Walmart has just been an absolute monster this year, where Target has kind of gone nowhere. What do you do? Let's just say, you've got these on and, it starts moving against you. Like, how do you work out of something like that?
Well, I mean,
to limit the risk.
You not necessarily know that it's going to do that when you enter it. I mean, so you start to say, hey, something's just not right. So I mean, obviously you go into the news, you go into, what could be the macro or micro influences, and you just have to have an orderly way of unwinding a position. Like this is not good. This is bad. Some people do say take an options stance against it, where they introduce they start buying a call against their position or something like that to reduce some of it. I would say that when you try to get too fancy, it works against you. I think just unwind the position in an orderly fashion, or like if you're trading something that is truly efficient and really works together and it's just not acting right, when you go, this is not business as usual, there's something different, there's something wrong, there's something I'm not getting, the best thing you can do at that point is just take it off. And you have to believe that, the market will let you back in later at a more appropriate time if you really want to be in it. I think just having that conviction to do an orderly unwind is going to save you so many times.
There's other types of pairs trades too, and sometimes you can incorporate 3 or 4 different stocks. And I know there's some bright traders, like we've kind of maybe coined this ourselves, and maybe Don Bright coined it, was Piston trading, where you've got, maybe 4 or 5 different stocks. You're trading them all against each other, maybe a couple short, maybe a few long. And the banks are a great example of that. You've got the big 5 or 6 banks with Bank of America, Wells Fargo, Citigroup, JP Morgan, Goldman Sachs, Morgan Stanley. And I know that I do it a lot as well. I'll have 2 or 3 or maybe 4 or 5 of these things on all against each other, and just kind of working, maybe the relationships of, more than even 2 stocks against each other. Right. Can you just quickly talk about that?
Well, firstly, there are so many different types of pair trades, like NVIDIA versus AMD, for example, is simply one of those that was staring you in the face even years ago as far as a huge macro opportunity because of what was happening in the industry. And those are chances to exploit relative strength. And many of them have worked out amazing, kind of like Netflix went to the moon and Blockbuster went bankrupt. I mean, there's so many opportunities like that where there's disruption coming to an industry, or there's one company that's extremely favored over another company because of the current marketplace. Same thing happened kind of with Walmart. Target, there was some differences that really separated those 2 companies. So that's one type of trading where you're really exploiting the differences between 2 stocks or a group of stocks. When things become very efficient because market caps are quite similar, fundamentals are quite similar, and you have groups like the money-centered banks and the integrated oils and the REITs and stuff like that, those make great opportunities for that piston trading that you mentioned. And I actually was probably myself that came up with that. It was a strategy that we developed that Don borrowed from us, but it was.
You came up with the piston trading name? Who came up with the name?
No, I did. You know what? Yeah, I'll explain why.
Credit to Don. It was Rob.
I'll explain why. So I used to kind of tinker around, build my own engines and stuff like that. So you have a crankshaft, which could be, say, the ETF or the index that a group of stocks follows. To me, that's the crankshaft. And then you have the pistons that are attached to the crankshaft, and obviously, as the crankshaft turns, or the pistons turn the crankshaft, they go up and down. And so you have some at top dead center, some at bottom dead center, and some in the middle at any given time in an 8-cylinder car or a 6-cylinder car or a 4-cylinder car. So I came up with the strategy of piston trading, meaning that in the group, in the peers, there's going to be some that are at top dead center and some that are at bottom dead center. And yet, as the day goes on and the forces to that group, neutralize them, they're going to change places. Or say there's a 1% separation between Chevron and Conoco, and that's excessive. you'll probably see that come to a 0.5% separation, or maybe sometimes you get an outlier off the open of 1.5% separation. By the end of the day, they're almost the same. And so I called it piston trading. And so there you go. That's so I own it because I came up with it from that relationship to an actual engine, and these electric vehicles obviously are a different class. You're not going to have pistons, but anyway, that's where it came from.
Great analogy.
I just want a question for you, Rob, before we let you go here. Have you guys been playing this AT&T Time Warner? I mean, the spread has collapsed. It got so close to the takeout price, TWX, a lot of regulatory things going on. Have you guys been playing that at all? I mean, there still seems to be some meat on the bone in that one.
I'm not that familiar with that. We used to do a lot of risk arb. I mean, and before we went into pairs, risk arb was our mainstay. We were in the original Time Warner AOL merger and GE Honeywell that blew up and all kinds of other things. So we've been through all the good and the bad. It's not a big strategy anymore as far as that, just because there's been so much efficiency in the risk arb space, and the holding costs have gone up. And that's one thing you guys have to remember, in a fair and balanced approach. I mean, it's all great to talk about hedging, but there is a cost of carry if you're going to take positions overnight.
Right.
And with the interest rates being so low, I mean, they've come up a little bit, but they've been so low, you don't really get a credit for the short side. And so that's been a big problem in terms of carry costs. So a lot of our traders say, you know what, it's actually a lot cheaper just to take positions intraday and then reestablish them the next day if you actually want them, rather than hold them overnight. You might actually consider, U.S. markets to have, negative returns on an overnight basis, when you factor in all the costs and all the carry costs.
Does Bob have any of that GE Honeywell spread still on?
I don't know, but I mean, look at GE Honeywell, certainly separated. There's an incredible macro. I mean, since GE spun off its finance division years ago, I mean, it's operated like a different animal too than it used to be. But that's been an opportunity to exploit that relationship in one of those separating trends. Honeywell has been clearly, smoothly moving up, and GE clearly smoothly moving down. So we have to be aware of persistence of trends, especially in a low volatility market. And when you create a spread relationship between two instruments, like you would do with a risk arb situation, like a merger, you'd be watching that number, and looking how many cents it has in it, how many dollars it has in the opportunity, what your annualized return might be if you put the spread on. The same approach over in pairs, just watching that spread number between two things, you can see the persistence of trend or the noise. So you really have to separate all your pairs, all the combinations of things you want to do, into two main categories. And I've said this before, is those things that tend to be noise type trading instruments. You're going to look for the outliers around a central tendency, or those that have clearly a separation going on, and you want to exploit that. So
Rob
trenders
Friesen,
or choppers.
Okay, Rob Friesen, president of Bright Trading, discussing pair trading. You can reach Rob if you want to email him for more information. Rob Friesen, Friesen @brighttrading.net. No, he didn't play professional hockey. Rob.
Yeah, I got one more thing to add there. Just a note for, I know you have some Canadian listeners from Toronto and Montreal areas. We are open in those provinces now, so we can take traders, and we are for a limited time offering a reduced deposit to join. So we've turned away people from those provinces for so many years, but you can now join us. So contact me would be great.
All right. Thank you, Rob. 853. S&P's trying to climb back here, down only 2 points at 26.25. Trying to get green on the day, folks. And keep an eye on 28.25. That was your close from yesterday. Hold that. go green, stay green. We'll see what happens on that. Dennis, we got about 6 minutes left here. Where do you want to go? Earnings, ratings?
So many different places we can go here. Let's go to the ratings land for a little bit. We hinted and we talked about Snap getting that price initiation at Evercore with an underweight and a price target of $7. That's interesting in itself. Let's just talk quickly about that one because Snap got the upgrade yesterday. I believe it was from Barclays, and they put an $18 price target. Exact opposite here overnight. Evercore comes out with an underweight and puts a $7 price target. So a battle of the analysts here on Snap. Snap giving back about 1.7%. Full disclosure, I do have that small short position here in SNAP. I've been taking some off though as it got in the lower 1450s. Thoughts here on SNAP from a technical perspective?
Thoughts were, if I was looking at this chart a couple days ago, I would have said, hey, you got a gap fill in the issue, and that just happened on yesterday. You had a gap down, I think that was on earnings, between 1409 and 1473, and you hit 1510 yesterday. Big old range yesterday. I'd rather see it back a little closer to 14 if they're going to shrug this off, or 15 to see if there's some sellers in here reemerging at the $15 level. Coming back on the downside, it's holding in here okay at 1453 is your pre-market low. But after that, folks, watch out. Yesterday's low was way down at 1402, and then previous day's low was at 1309. So you got a lot of air in this thing if they decide to whack it.
Spencer, where do you want to go? Ratings land. There was quite a few highlights.
Biggest one that I saw was Morgan Stanley upgrading Carnival Cruise Liners today from underweight to equal weight, so sell to neutral essentially. Not there were a lot, but not a lot that really that jumped out to me. Did any really jump out to you? Because there's a lot of like smaller firms making some changes today. Didn't see a ton of them from the bigger firms as far as upgrades or downgrades. I mentioned the Morgan Stanley upgrade to Carnival Cruise Line. There was also Deutsche Bank.
AIG,
Deutsche Bank upgrading AIG from sell to hold. Price target $58 there. I'm sorry, that was the prior price target, $58. But from the bigger firms, not a ton that really caught my eye as far as stocks that we follow. What about you?
Triple L catching an upgrade at RBC to outperform. That's slightly bid up here in the pre-market. Yet AutoZone, and a stock that I do want to talk about just because we were talking about it yesterday on the show. One that we got right here because I was talking about it was 750, and I was like, this is just up too much. And, I was saying I would not be chasing it up here and I'd be apt to short it. Wish I would have went with my words because I didn't trade it, but it opened right up at the highs and it tanked.
What do you
gave it all back.
I want to ask you about that, Dennis. What was the opening print on New York? Because I got an opening print of 747. What did you get?
Yeah, it's a consolidate open.
Oh, I hate that.
I actually, so there's two. So there's the open that happens right at 9:30, and that's the consolidate open, which can happen on any of your 13 exchanges. And then you have the New York open, which is the one that I usually follow. Actually, my system doesn't log the New York opens overnight though, so I'd have to go dig and get that number, and I don't have it just easily in front of me here. So I don't know where it opened yet. I can see the consolidate open that you're talking about, but I'm assuming it opened somewhere in the opening bar. So probably 750, to say there. And it actually was up at 760. So if you were in that opening bar, yeah, it was really wide. But AutoZone is a $700 stock, and it can open with a 10-point spread. So it is just a wild child there. But quickly collapsed within an hour. We were down. Not even with an hour, within like 20 minutes, we were down at 720. So, you're talking about stock losing 40 points very quickly. It is a $700 stock, but that was a significant turn as well. Again, showing you, good report, but the stock had just simply run up too much into the report. And this has been the story, and this has been the theme in earnings for the entire earnings season that we had. That, stocks were running straight up into the report, typically, need to blow it away to go higher. It did. But still gave it all back. It still wasn't good enough.
That was just a fact of light volume. Where's the offer? I'm going to get a print up at 750. Where's the offer? 755. I'm going to get a print up at 755 because there was absolutely no volume in the pre-market trading on that one. And then 763.30. I think I had looked for a gap fill on that one, and this was going back a long ways. There was a gap fill going back to early in the year, and it needed to get to 764.21. So it got within a buck of that gap fill and then absolutely collapsed. But it's just so hard to trade stocks like that. You know, it's a big spread. I mean, you know, you pay on the way in and you pay on the way out. I mean, tough stocks to trade. I mean,
and Spinner, you know, pointing out, and again, you know, we just had Rob talking about sympathy moves and pairs trading, and you know, this is what we talk about a lot on the show too. You know, I've learned from Bright Trading. I've been consistently profitable through Bright Trading through those strategies there, and you know, I automatically think about, well, who else is in the sector? O'Reilly and AAP. Those are your two other big guns, and both of those opened up near the highs and gave it all back as well. So you know, there's always plays, there's different ways to trade things there, and that's just another great way to you know, to take advantage of a move.
All right, let's look at a stock here for Stock Hunter. What do you make of AV, a gap up, a gap down, and now back up here? Let's see, how do AV is trade. Oh man, $10. If you have this thing, Stock Hunter, I mean, I don't have to tell you my opinion. Is there news on this thing? Is it getting taken over?
Yeah, it's up. What's the news, Spencer? We're talking about AeroVironment.
Yeah, they had news after they had earnings after the bell yesterday.
Really? And now
obviously is it good?
Okay.
Yeah, it was really good. So they were expected to lose 6 cents. They actually gained 29 cents per share last quarter. Sales of 73 million versus $63 million, and their fiscal year 18 guidance was in line, and their EPS was there. But the earnings for Q2 were well beyond the expectation.
Well, that'll do it.
This is an easy call here. 53.87, that's your pre-market high. Take that out, go up and challenge 55.75. That was an all-time high back from October. On this kind of thing, I mean, the longer it takes to take out the pre-market high, I mean, if I had this thing long, I don't know, I'd be almost inclined to take off like half right now and then maybe, you know, get a gift on this thing. But you got to barrel through 54 or 53.87. That's your pre-market high. And then the all-time high is 55.75. But straight up here, if you want to try and sell on weakness, it looks like 52 has been holding up here, basis the 15-minute chart. So if you want to sell on weakness instead of trying to pick a top, look out below 52. All right, Spencer, we started a minute late. We're going a minute over. Want to wrap things up and preview tomorrow's show?
Sure. Looking ahead to tomorrow, we're going to be joined by Mark Chaikin from Chaikin Analytics. But if you want to catch any part of today's show, again, you can do that on iTunes, SoundCloud, and Stitcher, or by going to youtube.com/BenzingaTV. Thank you to our guest today, Rob Friesen from Bright Trading. Thanks to all of you who were in our chat at premarket.benzinga.com. Thanks to all of you who listened on YouTube as well. Hope you all have a good rest of your day. We'll be back with you on Thursday.